Canadian investors are using ZSP over any other ETF for exposure to the S&P 500 index. Institutional investors, investment advisors, and DIY investors have all been trusting ZSP with their investment dollars since the fall of 2012. ETFs provide instant access to a portfolio of stocks to an investor in a single, cost-efficient trade. For an investor to own the entire index would require institutional-level trading systems and expertise. To accomplish this, an investor would have to buy 500 stocks at a time, and then as the market moves, it would constantly have to rebalance those 500 stocks several times a year. ZSP simplifies this process by aiming to provide instant access to the 500 stocks in the index in a very easy and low-cost way.
Before we get started, I just want to remind everyone that this information discussed today is not intended to be or construed as investment advice. Please consult a professional advisor before putting a loonie in any of these financial markets.
The dirty secret is that no one's ever going to get paid back.
People have the shortest memories when it comes to investment.
We just got to get Keith into Bitcoin.
Hey, there's a bubble. Welcome back to Loonie Hour, episode 134. As always, joined with the three amigos, Keith Dicker, IceCap Asset Management, Rich Diaz, PGM Global. What's going on? Rich, you got the crude oil shirt today?
I know. It's great.
Those are on the site.
They are on the site, and we've sold a few, actually. So thanks to a couple. Can I read some names here? I don't know. Now I've lost the page. But anyway, thanks everybody who bought some shirts and the mugs. Got a couple new ones coming up. Hopefully, hopefully they sell a few. A couple tongue-in-cheek.
I think you're being a bit modest. The sales have been a lot better than we expected.
Yeah, that's true. They have been a bit better than expected. And we have a couple new ones coming up soon. So yeah, it's all in good fun. I wear them regularly. As you can see, they're faded out. But I've had this one for years. But yeah, that's it.
Isn't that the one you wore in Calgary last year at the lawn bowling event?
No. The one I wore last year was the global emissions T-shirt.
I like that one too.
I wore the Tiff Macklem shirt.
Oh yeah, that was cool.
Yeah, I remember that day we had the lawn bowling event. Remember we were walking around the street party. We were interviewing people to know who the guy is on your T-shirt.
Yeah, no one knew.
Still up on my Instagram. Go check it out. Give me a follow too.
I don't have the Instagram on my computer yet.
Don't worry about it.
Yeah.
Get your kids to set you up.
Yeah, I don't have it though. I'll have to maybe in my next
just selfie
phone.
pics of your chin zoomed up close.
Hey guys, well, this is an exciting week. Hey, lots of stuff happening in the world and the markets and sports and society and all that.
Go Avs.
Yeah, I'd like to reiterate my love of bagels, specifically poppy seed bagels from Montreal. So I have plenty. If you'd like to send your bagels, happy to accept any and all bagels. I would never say no to a good bagel. So yeah.
So
it's
everyone loves Rich because you just say like awesome things, and that's another one.
So I don't protest, Rich. Did they turn down bagels?
Yeah, it was one of their I don't want to get into this, but it was like on their list of demands. They were asking for food and water and, a bunch of other stuff. Let's leave that to the side. The thing that really stood out to me was it said like no bagels, like in caps. And
Did they actually say no bagels? I didn't know that was a thing.
I was quite offended by that. And so as a bagel lover and connoisseur, I really took exception to the no bagels thing. And that's why
For the record, this is the pro-Palestine rally. Where was it again? What school was it?
I think it's in UCLA, but they're all over the place.
Yeah, so the protesters, she demanded food, drinks, but no bagels. Must be gluten-free.
Yeah. That too. And it was vegan something, or it was an interesting list, just to put it mildly.
Wow. She's got like a personal chef. That's amazing. This is what happens when we have no guests in the show. We tend to ramble, but quite a bit.
Well, it's all starting to sound a bit wacko, isn't it? Isn't that the other key word for the week?
Oh boy,
we're getting in trouble.
Isn't that the big word? That was the illegal word to use in Parliament this week, I believe. Wacko.
One of the CBC journalists, she was tweeting. I just couldn't stop myself from responding. She was like, "This day will go down in history it will never be forgotten. I'm like, lady, you need to get out. You need to get outside. You need like a hobby or something. And I was like,
It was like 6 months ago. They had a Waffen SS soldier in the building. Anyways.
Anyways, all right, we digressed. Canadian housing, we got quite a bit going on there. We'll kind of unpack that. We had the Fed, Jay Powell was out this week. Keith, a lot of turmoil happening in Japan, Bank of Japan, the yen. So we're going to kind of walk through that. A lot of the key themes that we've been kind of pulling on over the last month or two. So a little bit update on the Canadian housing. I don't have the Toronto numbers and stuff like that, but just looking at some of the Vancouver numbers actually came out today, the day that we're recording this. We're seeing quite a bit of change, I think, in the housing market, starting to slow down again as yields push higher, right? So remember, the narrative coming into this year was like, bond yields were falling towards the end of the year. Keith, what was it like? The market was pricing like 6 cuts or something from the Bank of Canada. And so everyone was kind of like hyped up, like, okay, rate cuts are coming, housing is going to reaccelerate. And that's kind of slowly faded as bond yields have pushed higher. And, here we are 5 months into the year, still no rate cuts. And I'm sure Rich will chime in on that in a little bit. So we're kind of seeing the housing market fizzling out. But the big thing here that I find really interesting is finally a change in the pace of new listings. So people have been kind of like perplexed as to, and myself included, that how well housing is held up in these major metro markets in Canada over the last couple of years, right? I mean, you went from 0 rates to 5%, the fastest tightening cycle, especially when you adjust it for house prices and debt loads. And really this story has been, there's been no inventory. So all the sellers basically just like hunkered down, nobody was moving, and there was no listings. Like, I think for like a good chunk of last year, we had 20-year lows in new listings, like for like 5 or 6 consecutive months. So people just like withheld inventory, and we had inventory levels at like 10, 12-year lows, which again, it's just hard to get like price correction when there's nothing for sale and people still need to ultimately transact. And so we're starting to finally see the listing side starting to change. We'll see if this is like a new trend or if it's just sort of, a 1 or 2 month thing. But new listings in Metro Vancouver jumped 42% year over year. So standing inventories north of 12,000 listings right now, something we haven't seen since the summer of 2020. So inventories finally climbing to levels where we're seeing downwards pressure, at least in the condo market.
Steve,
yeah.
Do you now have 12,000 listings?
I wish. To be honest, I'd probably be broke because none of them would be selling.
I know that's a lot, by the way. I thought it would be, but continue on. So we have
no, but that's like kind of, yeah. I mean, kind of what you're saying. Like, funny enough, right? Is like you take on like some of these listings. Like, it just depends. Like, if you have like an entry level house, still sells in like a week, 2 weeks. Like, as a realtor, great. You collect your check, you move on. You get these like listings that are happening like downtown Vancouver, these apartment units in particular. And these are just sitting like they're almost like, I wouldn't say they're going no bid, but like they're really soft. And I think that's the big surge I think we're seeing in the inventory side is from the investors. So it's not from families that are like, oh my God, my mortgage is up. I came up for renewal. I can't, I can't afford it. I'm dumping my house. Like, we're not seeing that. But what you're seeing is all these investors that were cash flow neutral, maybe making $100 a month on their condo rental, to all of a sudden their mortgage came up for renewal. Now they're renewing at 5.2%. And so now they're cash flow negative $700 a month. And by the way, because of the tenancy laws in most of this country, particularly in BC, is you can't raise the rents, more than, this year it's 3.5%. So you're stuck with this negative cash flowing asset that you're just feeding every month. And so a lot of people are just electing to put it on the market and sell. And so I think that's really what's happening. I think that's where you're seeing the inventory rise. And I think that's why you're seeing the majority of the softness in the housing market is actually just concentrated in that condo segment. So it'll be something to watch for sure.
But something's changed there, right? Because having negative yielding assets or owning negative yielding assets, 3-4 years ago, people didn't blink at that. So is that the price appreciation no longer makes up for the fact that you're running a negative yielding asset? Is there something that changed there?
Yeah, I think so. I mean, like what is it like? When you're borrowing at like 1.6%, I mean, I think like 60% of your mortgage payment from day one is going to like a principal pay down. You can argue at 2% mortgage rates, there's going to be continued price appreciation. You're borrowing below the rate of inflation. Like there's a lot of arguments to be made that, hey, you know what? Yeah, negative cash flow. I'm not gonna say it makes sense, but there's an argument to be made there. I think now people say, well, 5%, how much price growth are we really going to get? The government keeps hammering these investors. It's becoming very anti-landlord. That's the whole rhetoric in Canada, sort of anti-capitalist, da 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 da. And so it's just, I think, just people are just like bailing ship, basically.
Well, every pension fund in Europe had a negative yielding bond strategies for over a decade. So get used to it, Vancouver. Suck it up.
Yeah. So the bank. Go ahead.
No, I was just gonna say. That's the sort of the darker side of all this affordability stuff. I think in one of the first Loonie Hour episodes we ever did, all those weeks ago, I talked about if Canadians want affordable housing, they need their house prices to stay flat or go down relative to their incomes. And how I also said that that's not a winning strategy for really any politician, but that's what we need. And I think that's just, do you just see in general, do you see house prices just rising less than the rate of inflation, less than wage growth over the next 3 or 4 or 5 years? Or,
I mean, I just think like housing is it's so political that like if you get like double digit price growth, for example, like that's the end of your political term.
you think, you think growth is bad for your political term? Because 10 years ago, that would not have been true.
Yeah, I think so. And house prices for sure. But it's kind of like a catch-22, right? Because I think what we're seeing now is like, okay, you're not getting any price growth. In some segments, you're seeing, modest declines. Rates are high, and it's shutting off new housing development. And so like that's not going to be a problem for supply for the next, we've got enough in the pipeline, won't be an issue for the rental market, won't be an issue for the resale market over the next 2, 3, 4 years. But like, yeah, are you sowing the seeds for another housing crunch 6 or 7 years from now because you're not putting shovels in the ground today? Yeah, I think you are.
But we're clearly though set up. I think what Rich was alluding to is, we're set up right now in Canada so that if house prices decline, to make it more affordable for people who don't have a house. People who don't have a house in their market to get one, they're happy. But then you have another significant portion of the population that do have homes and say they're on the verge of retirement, they're going to yank out equity to go to bingo on Saturday nights and stuff like that. They're going to be unhappy. I don't think there's an easy way out with this for anyone. And maybe the best case scenario is that we do get, a very sluggish growth, over a long time frame. Maybe that will help.
I think you bring up a really good point there, though, right? Which is like you keep pulling on this thread, you come kind of full circle, which is like how large real estate is, and flat or declining prices, let's say for several years. Like, what does that do to government tax revenues, right? So if you're CRA and we just raised taxes on all the entrepreneurs and the doctors and the incorporated people, fairness for everybody. But again, if you're getting very few real estate transactions happening, prices are no longer going up. Like, think about the capital gains revenue that they're not receiving through that. The governments rely on transfer taxes. So again, a lack of homes transacting, that hits your property taxes, your development fees, right? No more new housing getting built because nothing is economically viable. How are the cities going to collect all their development charges? 30% of a new home is taxes.
Just a couple of comments. So first of all, our Minister of Finance just commented that the job of our tax system is to lean against the structural inequality. So if you do own a house and you have equity, you're gonna have to pay for it. I thought that was a great quote because it's pretty easy to it just screams, socialism to the nth degree. And I think people listening to the podcast know I am not a commie, and that's what it is, Rich. You can't go in that direction, or you're not going to get your bagel.
That's a new T-shirt on the Loonie Hour site.
Okay, well, I can work on that.
A bagel or commie? What are you going to put on the shirt?
We'll see. Who knows? Stay tuned.
Maybe the O in Rich. This is more important. Maybe the O in commie can be a bagel.
Okay,
and the C can be a bagel with a bite out of it.
Oh man, this is amazing. This is just fantastic. This is what people sign up to Loonie Hour for. I think what's funny is that you've actually revealed sort of two things. One is, to put my little tinfoil hat here, is I actually don't think that they want affordable housing, because I think affordable housing necessarily means much, much lower prices relative
100%.
to incomes.
Why does no politicians ever come out and be like, we need prices to drop 20%?
Right, because that's exactly. I think that's exactly right, and I think that and that is the reality, right? On every affordability metric, even if you exclude the crazy metropolitan areas like GTA and Vancouver, we know that housing affordability is very, very high. And no, it's not just the mortgage rates, which obviously contribute to that, but it's not just the mortgage rate. So that's the first takeaway. The second takeaway is, again, I stress that the biggest schism, or the biggest fault line in Canada is not rich and poor, it's asset holder and non-asset holder, in my view. That this could be up for argument, but it's about who owns a home and who doesn't own a home. And for the last 7-8 years, including in keeping interest rates way below inflation in perpetuity, inviting an unsustainable amount of people into this country, all of that benefits the asset holder, people who own homes like Keith, at the expense of people who don't, like me. And I think so all of this talk about how they need to increase taxes to target structural inequality, I mean, they have just goosed the structural inequality by making it completely unaffordable to own the most lucrative asset in Canada.
Yeah. I mean, so first of all, I think, Rich, it's a bit insensitive. It's sensitive for you to refer to Toronto and Vancouver as crazy. That's not nice. Instead, maybe you should use the word wacko. That's more appropriate. Yes. For
wacko valuations.
Yeah. But you're absolutely right. I mean, people talk about, like, they know, sometimes they talk about income inequality, but it's really wealth inequality. And the biggest part of the wealth inequality is not your income, because that's just simply a function of time. Working, and then you go that road. It is on the asset side. So, but I find today that a lot of the governments and different social groups, they're really trying to leverage, like, widen this wedge or jam it in there to create something that has existed forever. And it does add a lot of value to our society. I'm sorry, the value that's added is when some dude, he creates an amazing company that everyone benefits of for decades. And does that guy turn into a billionaire 10 times over? Yeah, of course he does. Right. Absolutely. But you get that, you do get that effect for the whole world. What do you have, Steve?
Yeah, speaking of like wealth inequality, there's a really good StatsCan drop some interesting information this week. So just kind of on the housing front, right? Like, crazy expensive markets in Vancouver, Toronto. How do you get onto that housing ladder if you're just a regular income earner? You don't have any pre-existing wealth. Well, what you do is you get your parents to co-sign on the mortgage so you can actually qualify for the loan, and you can get onto the housing ladder and start building some equity and some wealth. And so hopefully your parents are on that housing ladder to begin with, because if they're not, that becomes more difficult. So StatsCan says parents of adults born in the 1990s, they're on title as co-owners. So so they basically said, okay, of all the kids that are born in the 1990s, right, they're all now kind of in their early 30s, late 20s, trying to get onto that housing ladder. How many of those owners, those adults that are born in the 1990s, have basically co-signers or co-owners with their parents. And so across Canada, it's 17.3% of them have their parents as co-owners. And in Toronto, it's 27%. So 27.
Can we lump in? Oh, sorry. Can we lump in the people who are not co-owners but are given the money for deposits? I guess that
Yes.
goes
No.
by.
So that doesn't include. Yes, that doesn't include people that said, okay, here, little Johnny, here's a check for 200 grand. Consider it gift money as a down payment. That number is not included, which I think is, I would say, 98% of. So when you add that on top, it's like almost 100% in my experience.
Thinking about like little Johnny jokes now are about to hit the episode. No, but again, like we go back with this. No, we keep circling around it, and it goes down the drain. Like it doesn't go in the right direction here. You know, to solve this so-called income, wealth, asset inequality, you know, it is trying to tax the rich. And I think in Canada today, at what level do you reach the highest marginal tax rate for income taxes? I think it's 250 grand, 260 grand.
Yeah, I think it's 260. I guess it depends on the province.
Yeah. And some people are saying, well, you know, it is a lot of money, but, you know, in the scheme of things, again, I'm not trying to be, you know, insensitive boomer, right? But it's not a lot of money, truthfully, to be taxed at that high rate. But if you continue the claw away at the wealth that's been earned by the older generations, all of a sudden there's less wealth of that to pass along to the younger generations, because that's how wealth goes from one family, you know, it just continues to go down through the family tree. All of a sudden, then the whole thing, you know, becomes, you know, it doesn't work. It begins to grind. And then people say, well, you know, how do you fix this? Because older people had the benefit of, old generation had the benefit of housing going up, and they make money on it, and, you know, the younger generations don't. It's because of interest rates, everyone. Rates went from 20% in the early 80s all the way down to zero, and then they kept them at zero. They suppressed the global yield curve. That's why older people became wealthy. It's not because they were greedy or anything like that. And younger people today, it's just bad luck, guys, with timing when you were born. We're now going to experience rates going higher and higher and higher. And, you know, you can tax all you want, but, you know, we are in for this different world.
You want something like crazy just to kind of like round out your whole thesis there?
Wacko, not crazy. It's wacko today.
So I mean, I would agree with you, right? Like people that are like hearing this 250K, that's a great income. But like if you have no wealth and you're making $250,000 on strictly through income, and you live in Vancouver and Toronto, you're not a rich person. Your tax. So like, here, I'll give you an example. So National Bank estimates that $200,000 per year is the minimum annual salary required to qualify for a median home in Canada. So National Bank says $200,000 is the minimum annual salary required to qualify for a median home in Canada. At which point, of course, if you're earning $200,000, Canada, the Canadian government considers you rich, and you'll pay $65,000 a year in taxes in one of the highest tax brackets. So again,
that seems low.
Pretty much.
That seems 65,000 taxes seems low on 200,000. I thought it was closer to. But anyways, okay, it's still crazy.
That I don't know. That's the number, give or take, province, et cetera, et cetera. But like basically, you're at $200,000. You're in one of the top tax brackets, right? The Canadian government says, hey, this is a rich person. You know, they should pay their fair share. Fairness for everybody. Tax them close to 50% of the income, but that doesn't even qualify you for a median home across the nation, let alone Vancouver or Toronto, right?
Yeah.
So. Anyways, unfortunately, it's all broken. I don't know if there's any fixing it, but this brings.
There's plenty. There's plenty of fixing all this. Absolutely.
Well, let's get to the fixing then. Yeah. We had the Fed out this week.
Wait. I want one more tax comment here. You know, just to really, no, this is a legitimate observation. Unlike the other observations, right?
That's right.
But I want everyone to think about this for a second. You know, the money that goes into your bank account after you pay, that's your after-tax dollars, correct?
Mm-hmm.
everything you're spending that on, you're paying more taxes on top of that. And you invest it, remember you're investing after tax dollars, then you pay taxes on that. You have service fees on everything. It just keeps going on and on in that, once again, it's never enough. No matter how much tax you're paying, Steve in Kitsilano, or Rich, you're paying there in Montreal, or, Mark is paying in Saskatchewan, it's just not enough for government to do what they want to do. I mean, we are literally taxed to death. And I do encourage everyone, go to your library. Please do not buy it, because again, you're going to pay taxes if you buy this. But just simply check out the Canadian Income Tax Act, the physical Bible that this thing is. And it is a monstrosity. And so, for example, the new budget that just came out, how many pages? I mean, they actually rave about it. I'm going to make up the number, 718 pages or something, stupid like that. How many people were consulted on it, how many tax experts had a say on it, and, all that stuff. It's so much inefficiencies that go into our system that we have reached, the end of this road here. And it's like something has to change. I can change things on one afternoon. Just give me a call, Ottawa, and I'll do it. No one's going to like it except for Rich, and Steve's going to say, yeah, actually, it is pretty cool. But again, like these little small tweaks, tax credits here, let's tax this group there because they make money. Let's tax everyone some obscure weird tax that no one can figure out, and then give everyone a rebate that's apparently greater than
You
the
get
tax
back
that
more
was
than you
originally
give.
charged. Yeah, absolutely. 92% of Canadians get back more. I don't get that. Again, that should signal to you that, and again, it doesn't matter if you swing left or right or up or down. It's kind of at the end of our, the rainbow has said, or no, the sun has said, and all that stuff. Maybe the solar eclipse was the tell. Hey, people should realize
so
that it's
you've got all this taxation. There's not seemingly any tax cuts coming, and like I said, if asset prices stop going up, aka house prices stop going up, or the stock market stops going up, the spinoff on tax revenues takes a huge hit. So where are you going to draw blood from the stone? So, I mean, I think you can make the argument that somehow, some way, you need to get liquidity into the system to keep these asset prices running higher, and so the government can take their pound of flesh on those revenues.
But maybe
you need productivity growth. Sorry, keep going.
Yeah, maybe, just maybe, it is not a revenue problem. Now, for all you commies,
how dare you question the wisdom of our dear leader?
For all you commies out there, what I'm talking about by this is, for any economy and business, you have revenue coming in. That's your tax collection. Subtract from that all your expenses, and you should have money left over that you can reinvest back into your business or economy to keep a steady line going. The reason we don't have enough tax revenue coming in to cover everything is because of everything we're spending money on. It's just too much. So you have to start reducing our spending or become smarter with it. But yet that's never happened before. So you can tell I'm optimistic, where we're headed. But there's ways to make money on this, so I'm not, too upset about it.
Well, we'll get to that. But one of the ways to help the government out here is to get lower interest payments on the debt. And so it kind of brings us to the Fed. Are we going to get rate cuts this year? We're not. No. I think our dear leaders up here in the north would certainly need lower rates. I mean, we've got a very important election coming up. I mean, I think even in the U.S. too, right? I mean, I'm sure Biden would love 50 basis points before the election, but we had Powell out this week. Heath, I don't know if you have any commentary on that. If you want to, dovish comments, hawkish comments. What was kind of your takeaway from Jay Powell this week?
Yeah, I mean, they want to cut, and he was very clear. I think he was asked the question directly, and he said, are you going to raise rates? Are you going to hike rates? And he clearly said, oh, we didn't even talk about raising rates. Like that's not on his radar, which then implies that worst case, they stay flat, or depending on your perspective, or they cut. So, people are still, guessing. I think it is a guess at this point, that they're going to cut by, I think is it still 75 basis points, Rich? I think it's still showing maybe
From the Fed?
Yeah, but keeps getting pushed out.
pushed out a little bit. But the curious thing, with the Fed yesterday, and I picked up on it immediately, and and a lot of other people did as well. He's setting the stage that if inflation comes down, which we absolutely believe it's going to, stagflation does not exist in his world. It's going to be a perfect soft landing. Then they'll cut rates. So he's trying to sound a bit hawkish to say, "Hey, we're going to take care of inflation." At the same time, though, they tapered QT, says quantitative tightening. And by tapering QT, it's a form of actually cutting rates indirectly. So on one hand, he's saying, hey, we're not cutting rates quite yet because inflation is still sticky. Yet on the other hand, we're not going to quite tighten as much as we were before. And then someone else said, well, what about the election coming up? Are you guys thinking about that? And he said, well, no, we're neutral with everything. And, again, you got that drain that's circling. It was really messy yesterday, but he did have an opportunity using his commentary to follow through with all the data that's coming out. And all the data that's coming out of America right now, it continues to suggest that the economy is still okay. Inflation is stronger than expected. So if anything, he should have came out and said, hey, yeah, we probably won't be cutting here for a long time. If anything, we might raise rates. But there's one very important reason why he couldn't be hawkish. Who wants to answer? Steve, Rich?
US dollar.
Rich, Steve. Yeah, that's right, baby. King dollar. Because who's getting absolutely mullered in the currency world these days?
The yen.
Rich, Steve is now
baby.
2 for 2. Rich is on the zero here.
Pay attention, Rich. You're a little slow there, bud.
Yeah.
Don't make me cry.
But that is a key consideration. Remember, whatever the Bank of Canada does, the world does not care. Whatever the Fed is doing, everyone cares. And I think we suggested last week or the week before. We've had Yellen now. So Janet Yellen, she's the Finmin for the Americans. She went to China twice in a month, which is highly unusual. You got the Bank of Japan and the yen, like they're completely fire trucked. Like they are, it's over for those guys.
So I disagree on that. So this is going to be good.
Fight.
Uh-oh. Rich is still going to be on a zero when this one is over. Hey, Steve will have 2, Boomer will have 1. But there's a lot of outside influence.
Let's unpack this then.
Yeah.
So what for the listeners that are maybe not following the yen as well as maybe Keith and Rich here. You want to frame this up, Keith, or basically I'll frame it up. The yen is down. The yen's down 50% against the US dollar since 2020. So basically, they've run these massive public debts, and they basically monetize it on the Bank of Japan's balance sheet, right? So, Rich, what does the Bank of Japan own? I think, what is it, 60% of the government bond market?
Yeah, something like that.
They own a whole bunch of the equity market too, no?
Yeah, they do, but that's not unreasonable given their priorities. But keep going.
So basically, they've gorged on loads and loads and loads of debt, and they put all the debt, or not all the debt, but the majority of the debt on the Bank of Japan's balance sheet. And now they're kind of dealing with rates surging in Western markets, particularly in the US. And so you can get 5% whatever in the US, and it's still 0 in Japan. And they really don't have an ability to raise rates because they got all this debt, and they're just going to kill their bond market, which is anyways. It's correct me if I've missed anything there.
No, I mean that's it. I think the people see the sell-off in the yen as the beginning of a currency crisis in the yen. I don't agree with that at all. I think to have a currency crisis, there's some point you need to have. Number one, what Japan doesn't have is a current account deficit. And that to me is one of the key problems with the view that the yen is totally spooched and this economy is going to crater and whatever. And the other thing that they don't do is they don't have really foreign debtors. So they are a net debtor to the world, meaning they own an incredible amount of assets, foreign assets. And the other thing, and finally, the other debt that's not owned by the Bank of the domestic government debt that's not owned by the Bank of Japan is owned domestically. And so what you're basically asking, and so those two, that you need a couple of those things to not be so in order to have a proper currency crisis. So if you look at the Asian currency crisis in 1997 or the tequila crisis in 1994-95, both those countries and regions at the time had huge current account deficits. So when we think of South Korea as a major exporter and a powerful exporter, it wasn't so. Before the Asian currency crisis, they were massive. They were net borrowers from the world. So when their currency went down, their foreign debts shot up. Japan is the opposite. So that's a really important factor. Every dollar that every percent that Japan loses on its currency, it actually gains because it repatriates portfolio flows, dividends, etc. The other thing is that it is a net exporter, so it's competing against one of its major rivals in the region is China, and China insists on pegging their currency to the U.S. dollar. So I mean, and the other thing that's important is that their inflation is still only 2%. And so when you have, and so that's why I think, don't get me wrong, I don't think it's great that their currency is devalued. By the way, loads of other currencies are devalued to that degree, Canadian dollar, the euro, etc., versus the US dollar. But not all those countries are massive net lenders to the world, number one. And number two, I think that we forget just how important exports are to Japan. The final thing is Japan used to produce an incredible amount of things onshore, and now it produces and sells lots of things offshore. And so those translation effects don't affect the balance sheets and the operational ability of a Toyota or a Honda in the same way they would have done in previous times. And so that's why, I mean, don't get me wrong, I don't think it's great they're at 150. I think we're going to probably break, 175. We might go higher to 2. But this idea that they're in a full-blown currency crisis, it's over, pack your bags, hide underneath the desk or whatever, I think is misstated.
Boomer, get in there. Beat this nerd down.
Do you remember? Actually, that was really good, Rich. I think I may change my view. Remember the Big Short movie, Steve Eisman? Remember he was at the conference in Vegas?
Yeah.
He stood up. Okay. Yeah. 0, Rich. 0. It's going to 0. It's
wrong.
My view on these things is that, the explanation you gave, it sounds all fun and dandy, but it assumes there's no crisis of any kind. If everything was awesome in Japan, they wouldn't have to cap the yield curve. They would just rates rise to where they should be. But if rates go higher in Japan, the government's deficit, their bond issuance just explodes higher. And then automatically the banks and pension funds go under. So the pension funds go under because they're buying all the debt. The bank's regulatory capital does as well. So there's a reason why they're not allowing rates go higher. Like, they're not doing it for fun, because if it had no impact, they would just let it happen. And then more capital would come back into the country. Foreign investment would come in and all that stuff. So they are making this decision between the bond market and the currency world. Every country that has to make that decision, you always choose your bond market. You have to.
I agree.
Yeah. Unless you take up my suggestion for Canada, what we can do to really fix things, because then you won't have a bond market. But that's sort of a subtle suggestion of what we can do. But again, with the yen, it's come down. I think you said 50%, Steve. It is one of the worst performing currencies in the world, and relative to the US dollar. And then over the last 3 days now, 2 different occasions, the BOJ came out and actually defended the yen. So in both times, I'm not going to be able to tell you the amount that they spent, but it was a significant amount of both yen and USDs. So to do that, by the way, they sell US dollars that they have on their account to buy yen. That's what they do. They did it on Monday, I believe it was, and then again Tuesday night. I think it was Monday night and maybe Wednesday night. I don't remember, guys.
There's
You
a
can see it
Monday when it touched 160.
Yeah, and I think intraday volatility was about 4%, maybe, from the spikes there. So even after doing that, after all that settled down, the yen continues to decline. So right now, today, yen is down 2.3% again. Again, like it's just getting mullered out there.
Go ahead. Sorry to interrupt. What's the
Yeah.
exit here? Like, Rich, I mean, they're saying, again, government reported, so we take it with a grain of salt, but they have inflation at what, 2%?
Yep.
I imagine if their currency continues to debase relative to the rest of the world, particularly the US, you're just going to import more inflation, no?
Yeah, they are. But the thing is, you're getting wage growth that's beating inflation. They have real wage growth for the first time in a long time. I mean, Japan is not.
But if you got inflation in Japan going from 0 to 2 to 4, and you don't let your bond market move, you don't let yields push higher. I mean, obviously that's the definition of financial repression. I'm assuming the Bank of Japan just steps in and continues to print and sterilize that debt.
Yeah. I mean, don't get me wrong. The bondholders will continue to get killed, but who are the bondholders? It's the Bank of Japan. And who was the major shareholder of the Bank of Japan? The Japanese tax base. And that tax base is filthy freaking rich. They have a positive current account surplus of 3.6%. That's one of the largest in the world. And a 5% as a percentage of GDP primary income balance. That means every year they get 5% of GDP inflows of cash, money from the assets they own outside of Japan. Their population is shrinking, and yet their consumption and their per capita GDP has been stable. And so don't get me wrong, I'm not saying you should go out and buy the Japanese yen, but the view to me that this economy is going to collapse, to me, it lacks one thing, and it's the exposure to the foreign investor. It's the other way around. They own foreign assets. It's not the other way around. And that is to me where that's where you get stuck on this view that this economy is just collapsed into oblivion. If it was the other way around, if loads of foreign investors owned lots of their assets domestically, I wouldn't be sort of defending Japan as staunchly as I do. And I think that's a really, really important distinction. And you can't just sort of like yada, yada, yada it away. I mean, they are filthy, filthy rich, and they own an incredible amount of assets outside the offshore.
So they're printing money to buy foreign assets.
No, they already own the foreign assets. And they have 1.3 trillion in reserves, still at the highest level it's been, basically. It's only just off their all-time highs.
So he's starting to sound more convincing, isn't he, Steve?
This guy, look at this guy, MMT proponent.
I know. So like if you look at those fancy words you're using,
on.
current account
Data.
surplus and foreign investment holdings and stuff. I mean, the challenge with these words is that it excludes a very important word. Rich, this is your chance to get off the zero. What word is it excluding? Steve,
get off the bagel.
The market?
Yeah, it's debt. So Steve just said debt. So he's now 3-0 here. Your trade, they have a great trade surplus and all that, of course, but it's taking all of this debt, accumulated debt, to try to continue to produce all this. And I just think that, you made another comment, something about if the economy is not going to collapse and all that and so on. My view is that the currency collapses, and that's what causes the economy to really get screwed up here. And if the currency doesn't go into major crisis, you make an argument now, it's already in crisis. I mean, if you drop 30-40% against the dollar, it's going to be tough. But this is a big deal. And one more thing that has to be linked to this is, again, you can't view the world in isolation, everyone. Again, Yellen has gone to China twice in the past month. the Chinese, they do not have a floating currency, as you pointed out, Rich. Their currency is pegged to a basket, which is predominantly the US dollar. If the Chinese allowed their currency to float, like what the Japanese do, then you have a major crisis taking place in China. So there's a lot of things at play here right now. And I'm hearing some whispers that there could be, some kind of like another Shanghai Accord agreement coming out. You could see a devaluation of the dollar relative to yen and won. Like maybe it happens this afternoon, something like
Hey,
that.
Keith. So walk us through that. Like the Fed came out this week, data doesn't really support a Fed cut, but you have markets, third largest economy, fourth largest economy, whatever you want to call it, in Japan, that is, their currency is, if not imploding, it is in a very dangerous situation. They must be on speed dial with the Fed and saying, you got to get the dollar down. I mean, the whole world arguably needs the dollar lower. But
the world always work better with a weaker US dollar. Absolutely.
So how does he get the dollar down? Other than basically cutting rates into inflation that is still well above target.
Yeah, it said you had to look at it is, so what is the Chinese problem? And the problem is that they don't have enough US dollars, so that's why they're struggling. So then it comes down to how do the Americans give the Chinese US dollars, right? In a way that yahoos like us aren't seeing it, because if it is, yeah, there you go. Steve is now 4-0, Rich.
Yeah.
Come on, pick it up. Steve, you're a hot. Is that a hot? What? That's a hat trick +1, I guess, right? Something like that.
Good coffee today. Let's keep me sharp.
All right. So the Chinese need US dollars. So how do the Americans give them US dollars? They can't give them a swap line, right? That doesn't work. Maybe they can do some other kind of an arrangement, a credit facility that maybe some reporter can figure out or something like that. But they need to do something. But politically, it's going to be pretty tough for the Americans to bail out the Chinese. So they're going to come up with some kind of creative way if they can do it, or just in another way, just to stabilize the system over there. Because think about it, in Asia, you have the two biggest players that are under a lot of stress right now. So,
but for different reasons, though. This is sorry to be nitty.
But stress is stress.
Nitpicky, but it's not. It's not stress. Is not stress. When you are, I don't.
Hey,
I
how
don't
many
agree.
how many pre-sale condos do you have in Japan?
Is that
just so I can score
market?
A point here? When you say words like crisis, I think it's and you use the word Japan, I think it's unfair. So in 1994-95, during the tequila crisis, when the Mexican peso devalued, it was 140% in about 2 months. Okay. The Korean won during the Asian currency crisis in 1996-97 was 127 or whatever percent in 6 months. So it's not, to me, it's not accurate to say that Japan is having a currency crisis. I think Japan is devaluing their currency, in my view, a relatively measured way, given the pace. I mean, it's not great, obviously. Certainly, I mean, and I think it's just different. I mean, those two other currency crises, they were major net borrowers from the world, which left their government forced to do an internal devaluation as well as an external devaluation. E.g., they had to constrain their consumption and tighten their belts with respect to the fiscal, and their currency tanked. Japan's running a deficit. No one seems to care, and their consumption is relatively stable. And so they're just having an external devaluation, which is basically a net benefit to all of those companies that are traded on the TOPIX and the Japanese stock exchange. So I don't think it's fair for listeners at home to consider it a currency crisis. There's 0.1 for Richard.
I think, to be clear here, I think Rich just gave me a hip check across the blue line.
This guy just awarded himself points.
I know he took the puck and he went in and deked the goalie around the net, came back he scored. You get a point for that because the one thing that you are correct about, and just to correct what I've said as well, it is not a crisis in that they've run out of liquidity. Like that has not happened. Instead, it's this slow motion crisis. I said it, Rich. You didn't want me to say it. I couldn't help myself. But it is this slow motion event that's taking place. And you know what? When the Mexicans and Koreans and the Thailandese or Thai, what are you if you're from Thailand?
Taiwan. Oh, I don't know.
Taiwanese.
You're Thai.
You're Thai? Okay.
Yeah.
Taiwan's a separate country, Steve. It's different from Thailand.
Yeah, Thailand, Taiwan, Vietnamese.
But they lost access immediately, and they had the crisis very, very quickly. In Japan right now, it is again it's this slow motion event that's taking place. So let's wrap this up. How does it affect us here in Canada, right? Besides having this very stimulating conversation on the Loonie Hour, and rich scoring, which is great. The challenge here is that if both of these countries are not sorted out, and again, as dangerous as Japan's currency has been moving lately, the risk is still with the Chinese. And that's because, we always talk about, hey, what's the relief valve for an economy or a country? If there is stress taking place, and Rich, there is stress in Japan. If not, the currency wouldn't be declining this much.
I agree.
But the Japanese, they do have the relief valve. It is the currency. For the Chinese, their relief valve is what's happening with their the U.S. dollar holdings that they have, and they are again, it's not something they're going to. Hey, this is the number we have and stuff like that. Again, they're really struggling with the U.S. dollar balances, what they need. And so that's the country here that could really make things a lot more interesting. So if that were to accelerate into something that's not awesome, then that's going to affect all currencies coming up because money will go into the U.S. dollar and it will affect CAD.
Hey, the Japan's reinflating their housing bubble too, eh?
Yeah,
it's
again, rising for sure. It peaked in 1989, then spent 25 years declining, and then now we're starting to rise slowly and surely.
I only mentioned that just as a form of obviously it's just currency. I'm sure it's just currency debasement, right? It's like, it's interesting when you kind of look at through that lens. Obviously, I'm sure the prices are falling in U.S. dollars, but rising significantly in yen terms.
Let's just say one more thing here on this. So, in the futures market, yen is down about 35% since the end of 2020, beginning of 21. That's what we're looking at.
Mm-hmm.
Okay, so let's call it 30%. In Canadian dollar terms, if we were to experience something like that over the next 2 to 3 years, the Canadian dollar is at 49 cents, 50 cents. Would Canadians think that's okay, or would they be a bit concerned about it?
Where do you travel?
Different economies.
Rich, say yes. You get another point.
Okay, yes.
4-2. It's now 4-2. Let's move on now.
Let's move on.
What else you have there, Steve?
Well, so like I said, this is coming full circle to. We need to get the U.S. dollar down to alleviate a lot of the pressures that are building in many of these markets, particularly, I think, in Canada as well, right? We talked about finally, in the beginning of the episode, we're starting to see inventory. There's pressure. Like I said, there's still 50% of Canadians here that have to renew mortgages that have not seen a payment increase. So there's still a lot more pain that hasn't really filtered through into the actual system. And so it's really, in my opinion, it's still a rush against time for a guy like Tiff Macklem to try to have lower rates. So, you're not completely crushing your economy with everyone just piling all of their excess savings into interest payments. And so, but again, there doesn't seem to be any immediate sign that rates are going, materially lower. So, it's going to be interesting to see how this is all going to play out. One of the data points I'm sure Tiff's looking at was we had Canada GDP out, Rich, this week. So that came in softer than expected. It looks like, I guess we don't, they don't have the March figures out yet, right? That was February GDP.
That was April, I thought. Oh no, that's February. Sorry, it's February.
Yeah, so they're saying, I guess the preliminary estimate for March, it's looking like on all assumptions we should have the seventh consecutive quarterly decline in real GDP per capita. So it's almost like, man, 7 consecutive. That's like basically it's 2 years of
It's our fault. It's our fault. We started the Loonie Hour 2 years ago. It's our fault that per
That's
capita
like, I mean,
GDP
but basically,
is
like I think you would like that feels like if it feels like a recession, and if it's felt like that for a couple of years, I mean,
it is. It tells you two things. For all the squawking and bitching we do about population growth, just imagine if we hadn't invited 2 million people into our economy over the last 2 years, and how totally screwed we would have been. So you say, Rich, you're a hypocrite. On one hand, you criticize the population growth numbers, and on the other hand, you're saying if we didn't have that population growth, our GDP would have massively contracted. Both of those things can be true. I hold those positions at the exact same time. Mind blown. I think both of those things are true. And the per capita GDP to me is really, really an exemplar of what that phenomenon.
Tiff was actually out today. So he was testifying in Parliament. So I'll quote him. He says, "We do see renewed downward momentum in underlying inflation. The message to Canadians is we are getting closer. We are seeing what we need to see, and we just need to be confident that it will be sustained. Our key indicators of inflation have all moved in the right direction. And core inflation that strips out more volatile price strings like food and energy prices. We've come a long way in the fight against inflation, and recent progress is encouraging." So he's trying to sort of affirm all the politicians in Ottawa there that relief is on the way.
He's a wacko.
No.
He was at the epicenter of the wacko incident.
We like Carolyn Rogers, though.
We do.
Someday she'll be on the pod.
Hopefully. We do like Carolyn Rogers. I still think that, Keith, this is maybe I'm cruising for another point here. I think what he needs to see is sustained contraction in the labor market. And no one wants to say it out loud. It's not fun to predict people are losing their jobs. These are real people, not just numbers. And the economy, Keith, is not numbers. The economy is people. But that, I think, is what you need to see to have a sustained sort of contraction a sustained disinflationary impulse. I don't know is that worthy of a point or not, but that's what I think.
You got to rely on the random number generator to tell you when to full shoot.
That was pretty good. Do you remember do you guys know Richard Dawson from the Family Feud?
No.
You know? Oh, he used the talk show host for this, game. So when he heard all the answers, it'd say survey says, and the number would flip over. So survey says, ding. That's another point for Rich. So it's 4-3 now, I think.
Thank you.
No way.
I'm counting.
It's a comeback. It's a comeback. Guys, it's
Well, we should end the show right now.
Yeah, I think that might do it as well. These, policymakers and from both sides, the fiscal and monetary side, it's their job to try to be moderate all the time. Like they should never be screaming that the house is on fire or everything is perfect, that rates will never go higher again and a soft landing is coming. See, I just did it, right?
Fucking Tiff, honestly.
I got a minus point for that one.
Okay, so have any of your guys' views changed? Like seeing what's happening with the yen, knowing that we need to get the dollar down, we need to weaken the US dollar for most of the world here. Tiff's coming up here in June at the next meeting. Has any of your views changed on the Bank of Canada and the future direction for rate cuts, and then B, on the Fed, from the Fed, do you see any easing coming from them? Whether, again, Keith, I'm curious if it's like maybe not necessarily rate cuts from the Fed, but easing through sort of the back door, which is, they came out and announced, slowing of their QT.
Yeah, I think that's where they are. I think for the Canadians, they'll never admit it, but they are married to what the Americans are going to do here. They say, the currency, it's, we look at it, but we're not something they're targeting. They are absolutely looking at the currency. If you're a central banker, you're not watching your currency all the time. You might need a different job, right? So I mean, I think they're very mindful of what the Americans are doing, and of course, the Americans are very mindful, what they do as well. But the real, to answer your question, again, we don't know what the Bank of Canada is going to do. The market can price it as they want, but I suspect that the Canadians do not want to cut rates until they're sure that the Americans are also going to cut rates, or they're on the verge of cutting rates. And the Americans are non-committal to that right now. So maybe we go with, no action coming up here. June 5th is the next meeting. So we'll have a Twinkie bet coming up in a few weeks, of course.
June 5th, we actually have a special guest. We have got BMO's Doug Porter, chief economist, coming on the show. So he'll be participating in the Twinkie bet, whether he realizes that or not.
Those bankers love their treats, donuts, ice cream,
no bagels.
Yeah, my view, I think, is to sort of echoes Keith's. And that's not just because I want another point, but I think that the problem the U.S. has is that fiscal policy is still extremely, extremely stimulative, and inflation is rising. We talked about, now we sound like a broken record, but the services, excluding shelter, Steve, is now 8.41 on a 3-month annualized basis and rising. You're getting
the kick. Services ex shelter?
Yes, sir.
In the U.S.?
Yes, sir.
Is running at what?
8.41% on a 3-month annualized basis.
Oof. So if we strip out housing and food and gasoline and diesel and nat gas from everything, things are okay, right? That's the message that the average person is getting.
Well, they say
one more comment though with all this stuff with the currencies and everything, because remember we did mention earlier that everybody wants a weaker U.S. dollar, including the Americans. They want a weaker U.S. dollar. If everybody wanted that, then naturally the question is, well, why isn't it weaker? And that's because the Americans, I'll make up number, but really you have maybe say 60% of US dollars that's being used is actually being used in America, and the rest is outside. It's called the euro dollar system. There's such an enormous demand for US dollars all the time. It's growing because debt is growing around the world, but yet trade is slowing. There's not enough dollars being created. So again, like if we could have a weaker dollar, they would do it. They would want to do it, but it's not as simple as, it's going down this one directional road. Rich, you might lose a point here. Be careful.
No, I'm not. I think you got to be careful with the trade is slowing thing. So that's the difference. That's why a lot of the arguments we sometimes get is sort of a temporal argument, which is like, what's happening acutely right now in the last 10 minutes or 5 hours or 6 months versus what we think is going to happen over the next 4 months or a year or whatever. And if you look at sort of some of the export, and if you look at some of the growth indicators, they're actually turning up, whether it's the regional Fed indicators, whether it's the PMIs out of Italy and Spain and outside of Germany, because Germany's screwed for separate reasons. But if you look at exports from, out of China, they're outpacing exports out of the rest of the world. But so that's like, the rather near term piece that I think is important to bring up. But in general, I agree with a key sort of down the road, what happens sort of after this impulse fizzles out. And I think it will do faster than I think people expect. And that's why I think, it's going to be really interesting. I don't think people are hawkish enough sort of in the near term, which is I don't think they're going to cut rates this year. But when they do cut rates, they're going to cut quite a bit. And I think it's going to mean a lot of pain for a lot of people.
Steve, Rich just had a breakaway.
That's not a point.
Fired the puck and it hit the post.
Yeah, no chance,
Still
buddy.
4-3. 4-3.
All right, fair enough.
That's it. Game over. I'm calling it.
Okay.
It's a good place to end it. As always, guys, we appreciate the support. Keep the commentary coming. We do get a lot of emails coming through the Loonie Hour inbox. which of course you can do on looniehour.ca. There's a little thing there to fill out. But so we appreciate the commentary, the anecdotes, the support. And as always, we'll see you next week.